Chakri Lokapriya as well on the show to discuss the fundamentals as well as the outlook for the markets. Hi there, Chakri. Good to have you on board. Let's discuss the entire auto space because 4 straight sessions that we've seen that sector has been in the spotlight. How have you read into the pretty much healthy auto sales numbers that have come in, and do you believe that there is strong opportunity within the sector?
The auto sector has clearly done well, and as we've discussed in the past, and I think they'll continue to do well. The economy is still just recovering, so we're still in the early stages. It's still kind of some of the pre-pandemic growth levels are still not there, and some of it is still catch-up buying, which is happening. A combination of all this commercial vehicle sales are likely to pick up, so which means companies like Ashok Leyland, passenger vehicle, now that Maruti has some semblance of EVs, that looks good. And in two-wheelers, I think TVS Motors continues to look good, and M&M, of course, is a sum of parts story. So, which means the list is quite big, but they all look good.
Kunal, and understand how much confidence would it give it back in the market? The fact that the Adani Group yesterday said that it has prepaid loans worth about $2.6 billion. The fact that in February it is this episode with Hindenburg that actually rattled the markets. Do you think much of the confidence and investor trust is now going to be back? In any case, the stocks have seen a massive recovery from the lows.
Indeed. I mean, if you look at Adani as a group and its various companies, whether it's Adani Ports or Adani Wilmar, naming a few, all of these are actually kind of an annuity kind of a cash flow business. If you fast forward, Ports is a very steady state business. Adani is Ports is a growth company, but whenever the growth stabilizes, Ports income is a very annuity kind of business. Adani Wilmar, very similar story. Very strong brand. So like that, so from that perspective, I think they have now matched their both growth aspirations, brought it down a little bit, accelerating their debt repayments. And therefore, I think the outlook, now is in a far better place than when this whole episode broke out a few months ago.
CREC are good investment bets?
Yeah, indeed. Other than valuation, they have new avenues of growth. They're financing solar and other green types of financing as well as they're getting into infra financing in terms of fiber net, and all these things are very new growth areas. The net NPS is only 1%. Valuations are on their side. So I think both PFC and REC are looking good.
Okay, that's the take coming in on PFC REC. Those are going to be a bunch of stocks which are going to be in focus this morning. We're also looking out for IEX, by the way, although this has been a great performer of a stock on a year-to-date basis. But their May overall volumes are up 8% and the prices have fallen a good 30%, now standing at 4.74 rupees per unit. And these are the year-on-year stackable figures that I'm giving you. This year, the stock is appreciated about almost 9.5% or so. Yesterday, of course, the defense stocks were once again seeing renewed vigor. And Chakri, the big debate is whether or not these defense names have further legs to go, or you think they're going to consolidate for a while? And do you actually find value on the table to buy afresh into any of these names?
The stocks have done well, and I still think that they will do continue to do well. And yesterday, with the news of that, US was open to providing some technology transfer supports to Indian companies. That is a huge, huge positive as and when that happens. And as it is, all these companies, whether it's Hindustan Aeronautics, Bharat Electronics, all the shipyard companies, they're sitting on very strong order books. So I think the outlook is still good fundamentally, even though they've done well.
Have it. That's the view coming in on
going their way. Valuations, windfall taxes over, retail prices are strong, crude is down, yet HPCL, BPCL are just not bouncing back.
Indeed, these are one of those enigmatic stocks because valuation is always on their side. I think there are two things markets are expecting. One, there may be a sharp oil price hike. Oil prices globally may go up, in which case their margins go down for these companies. Or two, the prices. The companies are required to cut petrol and diesel prices at the petrol station as we run into elections. That's the other risk. So one of these two can happen, but that is probably what is holding back these stocks.
Okay, that's the take coming in on OMCs. Let's just take stock of what else has been moving in the main for Concor. Again, it's an underperform rating on Concor, ABB as well as Voltas. For Concor, they say that the weak exim cycle, losing market share, lack of any evidence of road to rail shift so far, and the lack of near-term visibility on disinvestment catalyst as well seems to be at play. For ABB, the concern, of course, is high valuations, pricing in the 20-year CAGR of less than 20% at 13% plus EBITDA margins. For Voltas, they say that the market share and margin losses have given leadership status in a segment with prevailing tough competition. Chakri, but cap goods, given the interlinkage to the entire overall manufacturing theme, just wanted to understand whether you also believe that in the near term these stocks could have topped out.
The names that you mentioned, I think ABB will continue to do well because this company, despite its high valuation, has a very strong product portfolio, access to its parent product portfolio, and companies which are high PE, which are able to deliver on growth, continue to remain high PEs for extended periods of time. So ABB looks good. On the other hand, Voltas has been, facing tough competition in the air conditioning space. There is no pricing power. All the companies are trying to take market share. Concor, I think, is a disinvestment story, but valuations, if you're a really patient investor, then Concor, yes, because disinvestment is a kind of unknown when it will happen, but valuations are on your side.
The other dark horse, Nuresh,
In the meantime, Chakri, just also wanted to get in your take on the entire telecom space as a whole, with the latest report coming in from CLSA that both Reliance Jio and Bharti Airtel are well placed to play the rising mobile data usage and penetration. How are you looking at telecom?
In the case of telecom, again, in the case of Bharti, I think the big expectation is they will take market share. Now, whether they in a two-player market, in a sense, one taking market share from the other is not really the story, I think, because I think it's just an expanding market share with 5G as and when that happens. So more importantly, the stock has done well, but still they're not able to get their ARPUs at a desired level of ARPUs. So I think, it's done well, so I wouldn't really chase it at this point. That is Airtel I'm talking about.
Chakri, good to have you on board. Thanks so much for taking time out and joining in. All right.